If the market was feeling good about the prospect of the global economy opening back up after suffering through an extended period of lockdown from the coronavirus, it seems to be feeling that much better after hearing the latest from Fed Chair Jerome Powell. While the Fed Chair did acknowledge the potential for the recovery to take some time, he was quite optimistic about expectations for a recovery in the second half of the year. He also offered reassurances the Fed was committed to doing whatever it takes, with so much more still left in its tool bag. Investors have been buying into all of this, though it's hard to feel good about a strategy where unlimited support works because you have the luxury of being able to print it out of thin air. Nevertheless, until investors are more unsettled by this fact, it seems as though stocks will be making every effort to keep pushing higher. Interestingly enough, the gold market hasn't been sharing that sentiment, with the yellow metal extending to a fresh 2020 high and multi-month high as well, as it inches closer towards a retest of the record high from 2011, just ahead of $2,000. In the current backdrop, a scenario where both stocks and gold are rallying is a scenario that doesn't feel like it will be able to hold up for any meaningful period of time, and we suspect one of these markets will have to give. Fighting the Fed has been a tough game, but it does seem as though the gold market has been having more success calling out the Fed strategy into 2020. Other developments into Monday include underperformance in the pound, which has been hit by worry of stalled Brexit talks, and BOE Haldane comments over the weekend about the consideration of negative interest rate policy. Looking ahead, Monday's economic calendar is exceptionally light, with only some U.S. NAHB housing data standing out. That's all for now.